Welcome to this week's edition of the Coaching Profession series from Kora Coaching and Business Academy. Every week we've been highlighting specific areas of the coaching profession. This week we're going to highlight the professional coaching of financial coaching. To do that, we have a guest who is none other than Brian, our financial coach. Brian, welcome to this week's series.
It's a pleasure to be invited to this series. Thank you very much.
Okay. Brian, tell us a little bit more about financial coaching. What is financial coaching?
Financial coaching, it is the coaching that helps, I would say, the client to understand the basics of finance. And then as a financial coach, I guide you to make sure that those basics are put in practice, and there alongside you, I move with you as an accountability partner.
Wonderful. And what's the difference between a financial coach and a financial advisor? Is there any difference, or is it the same?
Not really, it is not the same, but they really, one fits the other. As a financial coach, I give you the basics. The basics meaning that everyone uses finances, but does not understand the basics of managing finance. So I give you the basics to understand the best ways of managing your finances. The financial advisor goes ahead not only to give you the basics, he goes at managing your investment, looking into all the portfolios, and then gives you the guidance, which one you should invest in. And on top of that, he goes further to make sure that he gives you the tools of how to invest, which ways to invest.
Wow, that's amazing. I know that in developed economies, particularly in North America, in the US, you hear a lot about financial gurus or wealth coaches. So do you see any difference between being a wealth coach or financial coach, or is it the same that is done at different thresholds and depending on your clients?
I would say when you look at the wealth coach goes in looking at a wider picture. He goes not only on introducing the basics to you, but he goes ahead and wants to understand what is your vision, what are your goals as an individual or the organization. At the same time, how do you want to live your life? And then he or she guides you in the strategies and the tools and values that you will keep maintaining for you to be able to be successful in your life, the way you want to manage your wealth and all that. He does more of listening to your life, and at the same time works perfect to make sure that you become a successful wealthy man or woman.
Wow, I feel like being wealthy right now. Thank you very much. I know that there was a recent interview you did with a prominent broadcasting studio. We're going to show it now for individuals to be enlightened more, to see some of the work that you do. And some of that includes giving some lessons on tax reporting, etc. So we're going to take a quick look at Brian's interview on CNBC Africa. If you're interested to find out more about financial coaching, you can reach out to Brian. And also I would advise for corporates watching this, not just individual, but for corporates watching this, to take part in our sales and business development course that is going to take place in March this year. So thank you for joining us this week. We will see you very soon.
And of course, the biggest percentage of Africans don't understand why they pay taxes at all. You find yourself paying taxes at the end of every month or literally every time you purchase something. It's quite huge in, of course, countries like Rwanda or in the East African region where we are right now. First and foremost, do we understand why we pay taxes?
I would say that the big the bigger part of the population doesn't understand why they pay taxes. Reason being that the tax authorities do not take an extra mile of sensitizing the population their role in taxation. Take an example of the businessmen. The businessmen will tell you that they are the ones paying taxes, but in the actual sense,
are they actually the ones paying taxes?
No. The person paying the taxes is the final consumer.
All right.
If we take a scenario, if I'm importing goods from China, when I reach at any customs, everything that is taxed on me, it is inclusive on the price, and I end up giving it to the final consumer, giving me back my money as the businessman. So who suffers the pinch? The person who suffers the pinch is the final consumer, someone who doesn't know anything about taxes, who doesn't know that he or she must keep the government accountable in making the taxes they collect to put them to the good use.
There is a lot of taxes that we've heard of course, the corporate taxes, we've heard of excise duty, we've had a lot of them. Kindly just give me a step-by-step understanding of this. Not a very long one, but one that I can actually drive on.
I'll give you a simple scenario. We talk about like VAT.
Value-added tax.
Value-added tax. The value-added tax, as the business person, the government gives you the role of helping it or helping her to collect.
Are you becoming a tax collector now?
Yes, that is your role as a businessman or as a businesswoman, to help the government collect that tax from the population. That is why that any VAT or any value-added tax that you pay, you keep the figure. When you collect another one from a certain purchase that you're making, you have to less what you paid, and then you deliver the difference. If the difference is on you to pay, you pay. If the difference is that you are supposed to claim, then you have to file the claim to the tax authority, and you're given a refund.
This is for the business. So basically, you mentioned something rather very interesting. We pay about 18% in VAT here in Rwanda. If it all comes back to the final consumer, let's say I'm buying a laptop from an electronics store, and the 18% is added onto the money I'm supposed to pay, and it is the business that goes to claim that money, when does it come back to the person that actually paid the tax?
The person that pays the tax can only benefit if he or she is registered as a taxpayer who can claim the taxes that he pays. Ideally, for you to understand the tax properly, it is that the government borrows money from you, the population, to use it for a certain period of time. You can go and claim it back if you're registered. If you're not registered, you can't claim it back.
Okay. So basically what you mean is that if I bought something and I had a TIN number, they could actually register the taxes on me.
On you.
And you get tax refunds at the end of the year.
At the end of the year.
Okay. So I think this is rather interesting, but of course, we still don't necessarily understand, if I'm a business, what kind of tax am I paying? If I'm an individual, what kind of tax am I paying? If I'm bringing goods from outside Rwanda or from outside the EAC, what kind of taxes do I have to pay? Could you just give me an outlook onto this?
I would say that for someone importing goods outside Rwanda, you pay the import duty, you pay VAT, there is withholding tax, then there are
15% of withholding
15%
tax.
of the withholding tax is 5%, and it varies depending on how you have got how you have applied with the different tax authorities. Depending on the government, it can go to 3%, or it can remain at 5%, or even it can go to 0.
All right.
Then another thing that we pay, there is another one that was included by the East African community, that infrastructure development tax. It is like 1.5%. So all those are taxes that we pay. Then again, for someone who, like if we talk about, let me say, like CIT, which is like the corporate income tax, it is usually 30%. And this is the 30% on the profit, the net profit that you've made, 30%. If you're making losses, the government doesn't need your contribution of 30%. And to your surprise is that you're even allowed, when you're making losses in the first year, the second year, the third year, up to like the fifth year.
But you have to file that you're making losses.
You have to file it. The government wants you to be more open to her, to understand how you're performing, because she is a stakeholder in your business. When you make profits, she will take 30% of that
you keep
profit.
on saying she and her, and you confuse me, but allow us to leave it right there. And then move on quickly to one last question that is rather, we can't let you go without talking about it. We just saw the other day, July 1st, Uganda initiated, I think, 0.05 cents, dollars per day on over-the-top the WhatsApps and Facebook and all of this. Rwanda had a new tax law in about January, if not February, where they introduced a new corporate tax, of course. And we've seen Kenya also, just recently when they were reading their budget, they had new taxes put in place, all of which are seeking to see how they can actually make more money easily to finance the projects that they have, infrastructure projects, and budget deficits. As of right now, we're still looking at Kenya, Tanzania, Rwanda, all running on big budget deficits. Tell me, is this the best way to do it, or is it actually going to stifle the economy, from your point of view?
From my point of view,
you don't have to be politically
specifically
correct.
I'll zero on the Ugandan mobile money tax.
Okay.
The tax of mobile money and social media tax.
All right.
You realize that this one will not only create more money to the government, but it will affect the population.
But the government is looking at $4.2 billion just from over-the-top services.
You're looking at what is coming in, but you're really not looking at what you're blocking.
Okay.
There is what comes in that ends up contributing to the general growth. And when you block it by just a mere small percentage, others will not perform.
Basically, what you're saying is that Uganda is trying to get $500 from one person instead of getting $100 from 5 people.
From 5 people.
Okay.
I will take a scenario. I load my phone. It is not only affecting the social media. Before you use your phone, internet on your phone, you have to pay what is called OTT.
All right.
And when you're paying that OTT, it means that even when you're not going to use the social media, you'll still be affected by that tax.
Okay.
An example, if I did not have the OTT tax on my phone and I need to complete a transaction in China that maybe would generate millions of money to the economy, I'll be delayed. And if someone in China is going to delay by 5 minutes as I'm looking for someone to load for me that money and I be able to transact, I will have failed, because time is money. And as long as we don't save time in the process of anything that delays a transaction, it really affects the economy and affects the business.